With us this week, we have Cherie Jones. She is the Swanson Reed Director. She's going to dive into research and development, R&D, tax legislation geared towards startups. But Cherie, welcome.
Oh, thank you so much. It's always an honor to address the group at Tech Fort Worth, usually in person, but happy to be here virtually this year. Swanson Reed is an established global R&D tax credit consulting firm. The main countries we work in is, of course, the U.S., which is our headquarters right here in Fort Worth. And then we also are very active in the UK, Singapore, Australia, and Canada. Now, we work in all countries that have the R&D credit, but those are the countries that we have a physical presence and do the most of our work. And if ever the opportunity comes up where you're wondering about what R&D credits are in other countries, if you're planning setting up a satellite office, just reach out to me and I'll put you in touch with our international manager and educate you on which countries offer the best credits. Just always feel free to reach out. You can reach out to us for anything, not just the R&D tax credit. We're here to help. So Swanson Reed does about 600 to 650 R&D claims per year. That's all we do. We are R&D tax credit specialists. Now, I'm going to walk you through, I'm focusing my presentation on the changes that were made in 2016 specifically for startups. And what I'm hoping to accomplish, our learning objective today, is at the end, you should be able to identify qualifying research activities that you're currently performing and start capturing the costs for those activities that are eligible to claim. And we can talk to you offline about helping you set up cost centers to capture your eligible costs. And you should be able at the end to define the IRS 4-part test, the 4 qualifications to claim your work. And then you'll have a good understanding about the changes that were made for companies like yours and small businesses when the PATH Act of 2015 passed and went into effect for tax year 2016. And then we'll talk a little bit about the types of documentation required to substantiate the claim. There's not as much documentation as you might think needed from the company. Swanson Reed performs the heavy lifting by writing your R&D project briefs, which shows why all activities that we've claimed and their associated costs meet the IRS 4-part test. Now, the credit, the R&D tax credit is a tax incentive for work that's being performed, technical development work or technical process improvements performed in the United States. The work does not have to be successful to claim. The purpose of the legislation that was passed by President or signed by President Reagan in 1981 as part of the Economic Recovery Act, the purpose was to incentivize small businesses and startups to innovate. At that time, the concern was that we were losing intellectual property to Japan. So that is the source of the R&D credit to encourage U.S. companies to innovate and to develop new IP, because that in turn has been proven to be a big economic stimulus because you hire and as you grow. The 4-part test. Any company in America that can satisfy these 4 requirements has an R&D tax credit claim. The question always comes down to commerciality, and that's why we prepare no cost and no commitment feasibility studies to actually calculate the credit for you so that you can make an informed decision on which years you might wish to claim. Now, the first test is that the work that you're performing must be for the permitted purpose. And the IRS defines the permitted purpose for R&D work as you were conducting testing and experimental activities to develop a new or improved product, process, a new or improved function, device, or a new or improved service. Now, the second test is that the work being performed must be technical in nature. And I'm sorry, I'm saying these out of order. The work that we're going to claim must stem from the hard sciences. So that would be physical science, biological science, engineering, or computer science. So right there, those two requirements of developing something new or improving your existing products or processes, coupled with the work must stem from one of the four major sciences, that already removes sales and marketing because they're not performing that type of work. Now, the third test is we need to be able to document and show that the staff, the W-2 staff we're claiming, or third-party contractors that you engaged for this technical development work, we need to be able to show that they engaged to some degree in a process of testing and experimentation. Now, we document your experimentation process through a series of interviews with your technical staff in order to write your claim substantiation briefs to show why these staff members tested or experimented somewhere between 1% of their annual time up to 100%. And the work, like I said, does not have to be successful. R&D by nature is trial and error, and it's prone to failures. The intent just needs to be genuine, that you're performing these activities in order to develop a new or improved product, service, function, or a new technical process. Now, there are three cost centers that make up an R&D claim. First is payroll. Now, payroll can be W-2s or guaranteed income that is paid to members of the LLC, the C Corp, or the S Corp. And then the next category is supplies. Now, what we're looking for there are consumable supplies. We can't claim any item that was depreciated or even eligible for depreciation, and we can't claim capital equipment or any equipment that has been capitalized. And then the third category is contracted research service. That would be third parties that you engaged in the U.S. The work of the contractors does have to be performed in the United States to be eligible. Oh, and this is not typically on all my presentations, but I know that the Tech Fort Worth clients frequently pursue patents. That would be a fourth cost center that would be potentially eligible. We're allowed to claim the entire technical portion of the patent. So what that means, if you are pursuing a patent or you're contemplating a patent application in the future, it will be so incredibly helpful if you ask your IP attorney to itemize the invoice to simply break out the legal and administrative filing fees. That is the portion that is not eligible to claim on the patent expense. But normally, about 80% of the patent costs are normally technical in nature. And to go in a little bit more detail about the payroll, Now, this is going to include your technicians, the engineers, chemists, all of the technical people on the staff. And that can be direct labor and first line supervisors. Some of your staff, officers or owners of the company, they may not have any hands-on technical development work, but they're allowed to claim a percentage of time that they spend simply reviewing the work of others, reviewing the contractor's work, and thinking about the next step that you're going to take in your product development or your technical process improvements. If the officer does have both hands-on development work in addition to directing R&D activities, then they will earn a percentage of time for both their hands-on work and the time they spent simply reviewing and directing the work of others. And as we discuss, supplies ideally need to be consumed during the project. But let's say you buy a big batch of aluminum, some raw materials, then we are allowed to estimate the percentage of use of that particular cost in each one of the tax years. Other items would be chemicals, metals, wiring. The list is too long of consumable supplies to list in the presentation. And we want to avoid computers, trucks, all of those are depreciable items. The supplies, we need to zero in on some consumable supplies that are purchased and used almost exclusively in your design and development phase, not general production or project implementation. And we did discuss this already. Equipment, capital equipment has already received the tax benefit through the depreciation process, so we wouldn't be able to claim any durable equipment, buildings, or any item that's been depreciated. Now, for contracted research, they must be based in the U.S. There's only one workaround to this foreign labor rule. If you were in a position to engage a U.S. company to direct your foreign labor, it's okay that you know that that U.S. company is outsourcing that work to India or another country. But the requirement for the claim, we would just need you to sign off on a declaration that no one on your staff had any direct communication with the foreign contractor, either in writing or verbally. All of your direction work goes to the U.S. entity that you're paying in U.S. dollars, and that entity conveys your direction to the foreign labor. That's the only workaround to the foreign labor rule. And these expenses that are eligible to claim must meet the four-part test that we walked through. The purpose of contracting with that contractor was to help you develop a new or improved product, function, device, or service, and it required to some degree some testing and experimentation. And all you would need to keep on file is just your invoice to the contractor or the 1099. The items that are excluded for contracted research is any work that begins after the design and development phase. R&D ends when you have eliminated the technical uncertainty on the next step you're going to take in your product development. So when you begin manufacturing your product or move to normal production or project implementation, you have left the world of R&D unless you hit a glitch, which is very common. You believe you have your design, you're moving forward, but then it has to go back to your engineers or the design team because you ran into difficulty The moment you are in that uncertainty world again, and you're having to go back and test, redesign, experiment, you're back on the R&D clock. Also, if you reverse engineered somebody else's work, that would not be eligible to claim. The work must be performed by staff members or contractors of the entity claiming the credit. Simply adapting or duplicating an existing business component would not be eligible. It wouldn't have the experimentation and testing component with it. Studies or surveys relating to the management function, the technique, or market research, quality control, testing, those are ineligible. And of course, foreign research or any work conducted outside of the U.S. is ineligible. And travel, meals, entertainment, rent, all of those costs are ineligible. And royalty, dues, or licensing fees. What is eligible are those three cost centers: payroll, contracted labor, consumable supplies. And I failed to mention under supplies for our technology companies, if you license a specialized design program. Now, these are not programs like Microsoft programs or Adobe. These are specialized software programs like Developer Express, Cloud Azure, Jira, GitHub. These are specialized programs that are used exclusively in your design and development phase. Those costs are also eligible to claim under supplies.
Cherie, real quick, we had a quick question. So Cynthia was asking, since she is normally the inventor in these scenarios, can she deduct her time under those?
Yes, provided that she's on a W-2, a 1099, or she pays herself a guaranteed income.
Cool.
And she just gave one of those three, there would be no cost that we can claim for her work.
Okay, wonderful. Awesome. And then Cynthia had another really good question, but I think we'll save that till the end because that'll be a cool discussion point.
Okay.
Wonderful. Thank you.
Once you claim the credits, they belong to you for the next 20 years. You might not be able to use the entire amount of your credit this year. It depends upon how your entity is structured. Do you have payroll tax to apply part of the credit to or all of the credit to? When the credit flows through to the members, if you're a flow-through entity like an LLC, LP, or S Corp, the credits are earned by the entity, but they flow through on your K-1s as a personal, an individual tax credit for the members of the LLC or the S Corp. So if the credits exceed what you actually paid in tax in these prior years, the government's only going to refund up to what you paid in tax. But if your credits are higher than what you paid in tax, don't worry, those credits are yours and they'll continue to keep carrying forward every year. Your CPA will simply pull from those carry forward credits to lower your federal tax obligation at the end of the year. And the documentation that we require for our R&D study, and that is our first step, is to prepare a no cost, no commitment feasibility study. We want to perform the work at our risk in order to confirm the tax credit. And we want to have discussions with your CPA, especially when we're doing a look back. We're allowed to look back 3 years for potential R&D costs that you claim, or I'm sorry, that you performed, but you simply did not know that credit was available to you when you filed your 2017, 18, and 19 taxes. We're allowed to go back and look for potential refunds. So we would ask you to send us all of the W-2s that were issued in each of the tax years that you wish to study. Then we would ask you to send us your contracted labor expenses, the cost that you paid to third parties for this technical development work that required testing and experimentation, and then send your supplies, your consumable supplies. You don't need to send us invoices. You would simply send us an Excel spreadsheet, or if you can't get that far on your own, I have ways of helping you locate those supplies if you have not been coding them, in a certain way. So that's all we would need, that and any patents, if that is, if you incurred any patent expenses. Those are all the costs and the only documentation we need to receive in order to prepare an R&D study on the years that you wish to study. Now, with grant funding, we do need to back out any of the costs that were paid, those three cost centers: payroll, contracted labor, supplies, cloud-based software licensing fees. If any of those costs were paid with grant money, we need to back that out. As a rule of thumb, it's ideal if you can save your grant money, and I know certain grants don't allow this, but if it's possible to pay rent, travel, anything that's not eligible for the credit with the grant money, that's always ideal. But like I said, certain grants have requirements that you pay payroll with it, but we just need to back out any portion that was paid through grant money. And for patents, it's the technical portion. We just need to itemize to deduct the legal and administrative filing fees. If that becomes too complicated, which it frequently does, it's very difficult sometimes for the attorney to retroactively break out those invoices. We're allowed to put a weighting percentage on your total patent costs, a very conservative estimate. Usually if we have to estimate, it's around 40% that we will claim from the patent costs. And I realize you'll be probably shortchanged a little bit at that 40%. So just ask your attorney on every invoice to simply break out what portion of this cost was legal and administrative filing fees. And I believe that that is it.
Wonderful. Thank you again, Cherie.
My pleasure.